Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Metal Pink, and in today's video, I'm going to talk about that Ray Dalio's Bridgewater dumps bank stocks and the big guys, actually. Then the second thing I would like to talk about, that the SEC, Gary Gensler, claps back at CoinBase, says that crypto rules already exist. And the third thing I would like to talk about, it's all about that Tether takes out 90% of its bank's deposit. This is kind of reaction to the present banking crisis. So guys, all this in today's video, and every day I put a couple of fresh videos here to keep you up to date. So if that's important for you, simply subscribe to Blockchain Bloom. And if you like this kind of content what I'm creating, then hit the like button. So let's start it. Okay, and when we look at the market, as usually we do for start, we can see that, Bitcoin is down 1.5%. That makes Bitcoin $27,018. Ethereum is down about 1%. $1,813. When we're looking at the top gainers, Conflux up about 9%, Lido down 3%, and we'll be talking about 2%. When we're looking at the losers, XDX Network 6% down, Rocket Pool 6% down, Kava 4.5% down. Not major moves either to the upside or to the downside. When we're looking at here the candlestick chart, we can see that Bitcoin is here around 27,000-ish right now, holding itself. This kind of trend line is holding. You can see here a kind of falling wedge. Maybe it can play out. We go up, we go down. We will see how it works out. This is actually a bullish pattern, but anyway, it might take time right now. Okay, and now let's move on to the first topic. And the first topic, it's all about Ray Dalio's Bridgewater actually dumps bank stocks. So the world, one of biggest hedge funds, Bridgewater, has dumped major bank stocks. I mean, sorry, wrong button. So I mean, dump it to zero, as you can see it here. So Bridgewater Associates, one of the world's largest hedge funds, sold off U.S. bank stocks in the first quarter as the industry was, rolled by a collapse of three lenders. And we're talking here about the big giants like JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, and Morgan Stanley. And they cut their holdings to zero. I mean, this is quite significant, and it's also roughly, halved its exposure in Citigroup. So not to zero, but in these major banks, they cut it to zero. And this shows that they don't believe that to keep their positions, their stock positions, and their money in bank, it's the clever decision. And this could be, a sign for many investors that if the big guys thinks that it's not a great idea to hold these stocks, then maybe it's something to think about. And actually, when we're looking at here, consumer debt in the United States, it has passed 17 trillion US dollar. The first time, and this includes credit card debt, mortgages, and so on and so forth. But not just the U.S. consumers, but the country itself is in huge debt, and it has reached its debt ceiling, which means they really have to act on it pretty fast, latest at the beginning of June. Otherwise, the U.S. is running out of money and they cannot pay, the U.S. cannot pay its bills. So this shows how bad shape the U.S. consumers, the banking system, everything is. And Ray Dalio's move, in a way, Bridgewater's move, but he's the founder of it, was quite logical, to be honest with you. But definitely a major move when they reduced their bank stocks to zero in those five giants. Okay, then we have the second topic. The second topic is related to the SEC because they actually clapped back to CoinBase saying that crypto rules already exist. Actually, I'm pretty lost here already what Gary Gensler thinks and is saying about crypto rules. It's definitely not logical how the whole things unfold. It's a mystery for me, to be honest with you. So anyway, now we have the SEC, Gary Gensler claps back at CoinBase saying that crypto rules already exist. And this is definitely interesting. Here the SEC, Gary Gensler, has hit back CoinBase petition compelling that the agency to provide a clear stance on crypto regulation, arguing that there are already adequate laws in place. What kind of laws anyway? So saying that there is a financial intermediaries nodes in the network and they need to come into compliance if they have got securities on their platforms. Still question, is Ethereum security? Is it not? Who can tell us? Finally, in the United States. Mysterious, really what he's saying. Here, you look, again, in this article, it's pretty much the same. Finally given the SEC a formal response to the court in relation to Coinbase petition for clear crypto regulation, stating that any rulemaking may take years and that enforcement action will continue in the meantime. So hang on. Here they're saying that Coinbase is forcing them to come out with something which is impossible to have it in such a short time and it may take years. On the other hand, they're saying that crypto rules are already out. So I don't know. I don't know what's going on here really, but if it takes years, it's going to be crazy what's going to happen here in a couple of years' time. And also saying that rules for crypto are already in place and that the crypto sector has been largely non-compliant. So, if you see the clear picture, let me know in the comment section, because it's pretty confusing what he's saying. On one hand, he's saying that it takes years and it's possible what Coinbase is pushing. Now they're saying, but the rules are already out. Okay. Well, sooner or later, maybe later, we're going to find out what are the real rules for crypto industry in the United States. Maybe they're coming out. Maybe they're hidden somewhere in Gary's head. I don't know. Okay. Right, and the third topic is all about Tether. Tether, which has moved 90% of its bank's deposit out in the first quarter. So Tether had made its move, the reaction to this banking crisis situation. And actually, they moved, over 90% of its bank deposits, bringing it down from 5.3 billion US dollar to 481 million US dollar. Tether's actually market cap grew significantly in the first quarter from 66 billion to 82 billion US dollar, and they made this move to get away from banks, and they're also saying that the remaining bank deposit is spread out among several banks. So this is the reaction from for the banking crisis. Also saying that the USDT token is now backed 85% cash equivalents and short-term deposit that can be sold rapidly to process redemptions. So the question is still there anyway. So, okay, they moved that money. They have moved it, okay, because this is like risk, keep it in the bank. Okay, I do understand. But what's happening here with the audit? The audit, which was promised back in 2021, and we're still waiting for it. It hasn't not happened yet. And back then they said, well, they're just going to need a couple of months. And now the situation is just the same. So this market cap, this 82 billion US dollar, is massive. And you have a huge risk with USDT because it's simply just not clear. But okay, they moved that money, right? But we need the whole chunk. What is behind Tether, where they keep their money, and so on and so forth. Otherwise, how you can really trust them? But it looks like to trust them, it's not a big problem for many institutions, companies, people in the crypto business, because there is 82 billion US dollar in Tether. Anyway, let me know in the comment section if you trust them or not. But it's really just, we got used to it. We just got used to it that Tether, without all that, this is how Tether works. But I think it's not supposed to work like this. And I would love to see it when it's going to change. Right. Okay, guys, that's it for today. Don't forget, every day I'm making fresh videos for you to keep you up to date, short videos, long videos. So if that's important for you, then definitely hit the subscribe button, because then you get the notifications as soon as the new video is out. And also hit the like button if you like this kind of content. So I'm back tomorrow with the freshest. Have a good one. Bye-bye.